How are you guys? So, not too long ago, I made a video saying that I wanted to buy a car, and it was probably going to be around March of this year. And the reason why was because simply the economy was giving us the trends that it was going to be on a slowdown and that all prices were going to come down, and March was going to be one of those great months to buy something. But as we know, coronavirus started affecting everything that we're doing. There's no way of hiding it. I mean, people are quarantined, the NBA season was canceled, NFL people are already like taking precautions for what's going to happen. Formula One, the Australian Grand Prix got canceled. It's getting really, really bad. And also the stock market has gone to shit. There's many things that are being affected right now by this. And what exactly made me think that the market was going to be down around March for cars? And the reality and the real answer is, there was a lot of fake growth in the country where we got some tax breaks. Companies were really just flatlined and there was no growth anymore. Everything, all the growth that we were showing was really thanks to all the tax cuts that President Trump gave us. And when he was stimulating the economy, was really not working because there's only so high you can go. And to me, the biggest crisis that was going to happen next was going to be whenever people didn't have any money and inflation really took place. I thought this was going to be a quick one, but after seeing everything that's going on with coronavirus, I think we need to understand a little bit more of where we're going, and especially in the car world. So, first of all, this virus came out of China. China makes 25% of all the goods that get exported around the world and get bought by everyone. So 25% of all markets are really suffering right now, including ourselves. We have a few companies that are affected by this, that we can't go into production for some stuff that we have, some new collections that are waiting and whatnot. So it's part of it, and we were like, all right, we can deal with the China stuff, we can wait. But when it started to get to the point of the stock market has gone to shit, everybody's going to be taking a long break from working, whether it's the NBA, whether it's TV, whatever it is, that's a bad sign. So what exactly is going to happen next? This is exactly what I think the possible outcomes are of what's about to come. And it's not pretty. So number one, this is not going to be a 2-week thing. This is going to be something that's going to last between 3 and 6 months. That's my guess. I'm just speaking like out of everything that I've read, everything that I've looked up. It just seems like it's going to be something that's going to last between 3 and 6 months. The problem right now is not going to be so immediate to everyone. Why? Because everybody's got this month's paycheck, because everybody still has money, because no one's late on their rent other than whoever's late on their rent because they want to, or because of whatever that's going on in their life. But right now, let's say that everyone's at zero. In a month, big companies are going to start to say, you can't come to work anymore, or sooner than that. And we're going to start seeing that when people can't go to work, what exactly happens? They might get paid to leave, but some companies are just not going to be able to handle the cost and afford that. So if you have an employee, 20 employees, 1,000 employees, these people are not going to get paid. Most people in the United States of America, and this is a video that it's talking about the US, live paycheck to paycheck. That means they don't have any savings, they don't have extra money, they have some debt, and if they don't receive their paycheck, that's going to put them in a bind. So after 2 months, we're going to start seeing people that are not going to be able to afford their mortgage. If that goes on for another 3 months after the first 2 months, that means banks are going to start seizing assets, and they're going to start either taking those houses and the cars. And that's a really bad thing right there, because if we get to that point, all of these assets will become toxic assets. What exactly do I mean by that? I mean, if you have all these houses right now that are not for sale, and all of a sudden you have an inventory, like a massive amount of inventory that's for sale and listed for a really low price because banks don't want any more than whatever they're owed. So you're looking at 50% price reductions, 60% price reductions, and those hit the market at the same time. We're gonna have another case like what happened in 2008. The same thing's gonna go with cars, but this time around, guys, there's not that many more houses compared to how many more cars there are. While the housing market is still a mess, it's not that easy to get a loan for a house unless you really qualify for it. Whereas cars, anyone can get a car loan. We have the most amount of toxic car loans in history by a lot. We have the most amount of cars we've ever seen. We have the less interest of anyone to drive these cars we've ever seen. So what exactly is going to happen to the car market in the next couple of months, 3 months, 4 months? If this whole thing of stopping the markets keeps going, we're going to see a bloodbath of the size that we've never seen before, at least in the car world. In 2008, a Carrera GT got to $260,000. I think this time it can be lower. The only saving grace here, but it's weird because I don't know, because this is the first time that it's ever happened. All of the smart investors were already cashed. That means they pulled all of their money from the market, they were liquid, they have all this money. So rich people in 2008 got really affected by it because we didn't know everything that we know today, or that they know today. And because of everything that they know, they've taken measures to go, into this year thinking that there's going to be a slight adjustment on the market. And with this happening right now, a lot of people are going to make a lot of money. But the thing is, all of the rest of the people, which is pretty much the really bad financial meltdown that I saw coming in the future, can happen right now. Why? Because the rich are going to get mega richer, and it's not a bad thing. No one's talking shit about them, but the people that don't have any money are going to get mega punished, like incredibly punished by this, because there's no income source. Now, the one thing that would really do us well and would really help us out as a whole, as a society right now to get out of this, and let's not focus so much about the cars, because the cars, they're going to go down in price. There's nothing that's going to stay in price. Nothing's going to go up. Everything is going to go down, simply because there's not going to be enough money out there for people to finance these cars anymore, and it's going to be out. All the banks, all of the paper that is associated with those cars, it's going to become a toxic asset. The banks are going to try to get rid of everything that they're holding as cheap as they can, so they can get rid of it as soon as possible, and that's going to cause a lot of problems for everyone. Now, in 2008, we made a couple mistakes, and number one, we bailed out the banks. What does that mean? Instead, like what we did in 2008 is we gave the banks an out, because let's say that, and this is just a number that I'm just throwing out there, it's completely stupid, but I'm just giving you an example that would apply right now. Let's say that Citibank has $1 billion in debt from people that owe mortgages to Citibank. So if Citibank seizes $1 billion worth of houses, and puts them on the market. When you have that much inventory, that means all of the market goes down. All of the $1 billion worth of assets that Citibank had, that would go down in value to probably 50% of that, if not 40% of that. That means that $1 billion became for them $400 million. And what the United States did was, let me pay Citibank for all of their losses. But that still created a toxic market. Why? Because all of these assets are floating around without an owner. And when those assets are floating around without an owner, there needs to be a demand, but no one has money to buy them, so they keep depreciating more and more and more and more. So the only people that really got help there were the banks and the CEOs of the banks and the people that work at corporate in the banks. The people got fucked. But instead, what we would have done in 2008 was pay for the mortgage like the United States. Instead of giving like trillions of dollars to the banks, they just gave that to the banks as, I'm paying for everyone's mortgage right now, and I'm paying for everyone's car payment right now. Then for a full year, then no one would have a toxic asset in their hands. The banks wouldn't have it, the market wouldn't have it, and it wouldn't exist. And that means none of these things will depreciate and cause the problems that we had in 2008. So what exactly is the best move right now? The best move right now for you is, if you have a car, the reality is things are gonna get worse. So just know that, at least that's my guess. And just do with that information whatever you feel like it's right to do for you. And that's pretty much all I can give you guys right now. This is a first. I've never lived anything like this before, through anything like this before. I've never seen a financial meltdown coincide at the same time with a huge spread of a pandemic. And this is a first for all of us. So all we gotta do is brace ourselves. Whatever you have, just live short right now. Don't overextend yourself, and good luck to everyone. And I hope that this helps anyone watching the video. Take it easy, guys.